So the way that we use the roadmap, and these are all trade scalper signals that you see here, and those of you who have the trade scalper already can see the signals the same as I have them. And so the roadmap signal here says roadmap long or roadmap long. It's basically saying once it lands in the zone, look for a long opportunity if it reverses off of it. All right. Thank you, guys. Okay, so here we are right now as we speak, right here, right now, live chart, live market environment. So the market's going up and up and up and up and up, hits the zone, and then goes through it. So this zone here is, in essence, no longer valid. I'm not really concerned with it. So the next zone I have to be concerned with is here. So if it lands in this zone, there's going to be a potential for a reversal. Now the way that this works is interesting because I'm not looking for anything except for a lot of transactions that are hitting these areas that are already predetermined to push the market in the opposite direction. And the best way that I can describe this is, let's say that Carrie or Marlon or George, they're buying and they're accumulating and they're buying. So let's say that you buy 1 or 2 and 1 or 2 and you're accumulating. I would say, Elliot, you could consider it support and resistance, but it's not based off of previous support or previous resistance, Elliot. And as you're accumulating your positions, you say, okay, the market's in my favor, I'm in the money, as it's called, and now I want to take a profit. Usually how institutions and how traders take their profit is they exit the market in a hurry. They get out all at once. So it's almost as if they click the close position or get me out of my position. And so what happens is, even though you may be entering slowly and accumulating 1, 2, 2, 1, 2, 3, when it comes time to exit at these zones, you're exiting with 10 or 15 or 20, or as fast as hard as you can. You're trying to get out of your position to take the profit or take your profit. And what happens is it absorbs all of the traders that are currently long. So there's no way that if you have all these little traders trading 1s and 2s and 5s, and then all of a sudden 100 contracts hit the market, that the market's going to continue in that same direction. It's going to absorb, and it may even reverse the market in the opposite direction. So that's the premise behind what the roadmap is doing. It's looking at areas where there's going to be profit taking. It looks at the amount of contracts that are hitting at the moment in these specific zones, in these specific areas. And then first, like I said, as a filter, you say, I am going to avoid taking any trade in this area here or in this area here because I may get run over. And secondly, it looks at an opportunity to be a buyer or to be a seller. And third, if it does go through the zone, think of it almost like a breakout, and it can continue through the zone. And I say usually that happens when the market is more volatile. So there's a couple of zones that it creates as it continues to move in that same trending direction. But if it breaks through the zone, so over here, you see how it broke through the zone, it's almost to say, okay, the zone is no longer valid, it's not being held, it needs to go higher. And the same thing here, as the market starts to go down, you see a double wick short, you see another double wick short. These signals are the trade scalper, but you have to be careful that at the moment that it lands in the zone, that the market may reverse in the opposite direction. And that's based off of selling, 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 and then massive buybacks where you get overrun, where the market could go in the opposite direction. Now, because the market did not reverse and you were cautious or you filtered out some of these signals, once it goes through the signal, so we're looking for the price itself, the candles, to show me that it penetrated, which it did, here on this candle. So this is the candle that it went through. It's almost to say, okay, this is no longer valid. It's the next zone, which is, again, plotting already. It's the next zone that I am going to be very careful not to go short, or at least if I am short, think of it maybe as a profit area, profit target as well. So as soon as it landed in the zone on this candle here, right there, the market did not go through the zone. So it didn't go through it, which is a good thing. You're anticipating that it's going to happen, and then it reversed. So the zones are there as a protective filter, not to go in the same direction, followed by a potential counter-trend signal, and even followed by a breakthrough. So if it breaks through, you have the opportunity to say, okay, the zone is broken, it's no longer valid, there's nobody there trying to stop the market or take profit. I can now go through and continue on in the same direction until the next area, next zone. All right. Mohammed, David, Sam, Kerry, Elliot, Roy, any questions? Marlon, Kerry. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.